So when people ask me what is my favorite European or UK stock, I tend to say B&M. Look at this stock. It is down massively at the moment from the last couple of months. It is down at basically where it started all the way back in 2014. And yet, based off of 18 analysts here, the general consensus is a buy, with 10 putting at a strong buy, 3 at a buy, 4 at a hold, and only 1 at a sell. In this video, I'm going to be telling you exactly why I think B&M is a perfect stock to be buying if you're looking for a good UK stock with potentially a lot of upside in the next coming years. So what is B&M for my American or worldwide viewers that haven't got a clue about this company? It is a broad retail company that is very diversified and sells, as you can see here, pretty much anything. I mean, you go in there looking for something, the odds are they have something at least close to it. I mean, it's kind of crazy the amount of stuff they sell. They have products at discounted prices, which is exactly why I think this could be a brilliant stock going forward, especially with the climate that the UK is in at the moment. It operates in over 700 stores in the UK with additional locations in France. The company segments its business into UK B&M, UK Heron is called, and France Babu. Probably said that wrong. But like I said earlier on, this is a company in which sells very cheap products, and they really do. You go in there and you do see a lot of cheap deals, hence the name Bargains and More. That is what B&M stands for. And why this stock came to my attention is because the other day I was going to B&M. I can't actually remember what I needed, probably something completely broad. I think it was actually like a toaster or something. And the parking was crazy. It was absolutely rammed. I mean, there was obviously places to park, but yeah, I've never seen that store so busy before, and I have been driving past it recently, and it is consistently busy now, which is really interesting. I don't know if that's just something that's just my local store, or if that's a nationwide thing, but it does seem to be really busy in B&M at the moment. They are only expected to gain at 2.05% over the next year, but I could potentially think that that might actually be higher just based off of how busy I have seen it in there recently. Of course, the UK is going through a bit of turmoil. It has been for quite a while now. Cost of living has gone up. Inflation is crazy. Wages aren't really keeping up, and they never really have done, so people are struggling, and B&M is the perfect opportunity for people who are struggling, of course. Hence why I was there looking for a toaster. And so if we actually search toaster here for comedic effect, but it's actually quite a useful thing. I mean, look here, you can see a toaster is for £3. I mean, in dollars, I think that's probably like $4.50 or something stupid. I mean, that is ridiculous. And they do obviously sell some more, in quotation marks, premium toasters, but obviously that is still very cheap. But it is a company in which is just massively cheap. And in times like this, people do rely on companies like this. I mean, even when, I mean, this channel isn't a toaster channel, don't get me wrong, but this was £6 and it is now £3, so it's 50% off. I mean, that's just ridiculous. But then again, you do have to think, where's their profit coming from then, because they're selling a flipping toaster for £3. Well, that is where they do start to struggle a bit, as we will get onto. Well, we might as well get onto it now, being as I'm talking about it. But here we can see a liquidity ratio isn't particularly great at all. They do have a lot of debt. But this debt could be a primary result of its strategic decision to finance, expand, and invest in infrastructure. Whilst this approach supports growth objectives, it also necessitates careful management to ensure financial stability, especially in the face of market fluctuations and economic uncertainty. So it is interesting to see that it is this low. But back to the retention rate, as of course they're selling toasters for £3. How are they making money? Well, they are actually making from 9 to 6.7% retention within the last 3 years. These aren't quarters in this case because I can get quarterly data for them, and it has kind of fudged up all of my metrics here, which looks a bit weird, but just bear with me. But yeah, that makes sense. I mean, their retention isn't massively high, but they do sell products for massively cheap. Doesn't really make sense either, but looking at the free cash flow here, we've seen this be very volatile recently, but it does seem to be relatively steady, which is good. But this could indicate that in the last 4 years we haven't actually seen any growth within B&M at all, to be honest. It seems to have been very, very steady. And of course, on a 365-day chart, we've just seen this absolutely fall off a cliff, and the volume has been relatively steady alongside it, which is interesting. And on a 91-day basis, it is the exact same story. I think it's fair to say that we are definitely in the final stages of the market cycle investing guide here on this chart. So it could be that we are expecting to see this jump massively up now, especially because we are seeing that people are starting to shop at B&M more and more currently. But let's get back to the technical analysis here. Looking on the figures, we have a PE of 8.18, which is really low even for UK stocks. We have a 52-week high of 530 and a 52-week low of 254, this being a difference of 279, and the current price is at 269. This company went public in 2014, of course, and with an earnings per share currently calculated at 32.99, we can conduct an intrinsic valuation here. So looking at a bullish intrinsic value here, we have this set at £394 in this case, with a current price at 269 and a margin of safety of 25%. We get an acceptable buy price at 295. And on the right here, bearish indicator, we have an intrinsic value of 280 with the current price at 269 and a margin of safety of 25%. We get an acceptable buy price of 210. So if we're going between the two of these on an intrinsic valuation on the mean here, it is set at 337 and a acceptable buy price is set at 253. So this could indicate that there is room for growth, maybe not a full reversal. I don't think we should expect to see this stock climb all the way back up to £500 territory. I think we might see this climb back up to maybe at the peak of 300, but that is still a relatively good return, especially for a UK stock. And there is potential for it to go even further, especially if this cost of living continues to carry on in the UK and people continue to identify that B&M is going to be a key player in that world. And here on Peter Lynch's valuation, we get a result of 2.8, which indicates this stock looks massively overvalued. I should also actually mention now that they do pay a dividend yield of 5.52%. So if you are after a nice looking dividend stock, then B&M could be exactly that. But where things start to get a bit ugly for this stock is when we look at a discounted free cash flow analysis. We see here the growth rate is set on an average of 6% year over year, which is actually more than the current growth rate in which we're projected for this year, which is actually a good thing. But we can see here that with a discount rate of 8.6 and the equity value being that big number there and the shares outstanding, we can see that we are massively overvalued based off of the free cash flow in which this company has. But again, this company is it's called bargains and more, so they don't actually really prioritize profit as much. I know that might sound bad for you American investors. It might seem like, well, what are they doing over there? But it's just sheer volume for them. I think if they had a few less shares, and this would be perfectly fine, but it's hard to say at that price. Obviously, this year's growth is only set at £1.47. I think for this reason, I want to say let's not include this in the analysis, but you should always include metrics like this as it does shadow a doubt onto the point of the video, which is a bit annoying. But I'm not biased. I don't want to shout and say buy this stock, buy this stock. If we do look here on the free cash flow, it does look to be something in which could potentially hinder the growth of this stock. But in my head, especially with what I've seen recently, this stock is going to be something in which should absolutely jump back up, especially because we are currently at basically an all-time low at the moment, almost an all-time low. We are only lower than this in November 2016. That's not November, that's October. So it's clear to see that there could be a good chance this stock should reverse. Within the next 12 months, price targets are set at a high of 640, which even I don't have. I mean, that's kind of crazy. And a low of 299 with a mean being at 444. So the analysts seem to think this stock is a massive buying opportunity right now, and so do I. I don't have it priced in to be going that high though, but that might just be a fault of my own potentially. But the general consensus is that this stock should absolutely explode in the next year. So I hope you have enjoyed this video and found it somewhat useful. I am not a financial advisor. None of this is financial advice. So if you have enjoyed this video, please do leave a like, subscribe, and share. Again, if you wouldn't mind subscribing to the channel, it would be greatly appreciated. With that being said, I hope to see you for the next video, and peace out.